All right, I wanted to make a quick response video here for Slade and just kind of go through his post and talk about some of the things that we were working with in the last zero discussion. So let's start with this one. How do you actually quantify and get specific about things that seem so discretionary, like reading narrative or reading the tape? There's a lot of approaches to this, right? There's no one way to do it. I know whenever people hear the word quantify or systemize, they think, well, there's only one right way to do something like that. There really isn't. However, what you do want to think about is whenever you quantify something, what are you actually doing? You are breaking it down into individual variables and then tracking those variables as best and clearly as you can. So, whenever it comes to something like narrative, let's start there. Here's a post from Inigo. He's a guy I work with a little bit on the desk, and he's a great trader, and he has a simple way of breaking things down in a quantifiable manner. What he does, this is a post of his from May 5th, and he talked about his playbook screenshot, and it's very straightforward, right? It's he has the specific type of trade it is, and the monthly and the weekly DVA time frame description. So is it an IPB plus an extreme fade? Is it an extreme fade on both? Is it an IPB or you know, vice versa on either which time frame. So what he does there is he essentially separates a couple of different variables, right? So the way this works is he has two different time frames. He has the weekly and he has the monthly. Then he separates those into individual trade types. Extreme fade. Looks like he has an RPB on there. He probably has an IPB, and I'm sure there's also the breakout pullback. So there's one, two, three, four individual variables related to each time frame, and then he does that same exact thing for these two, and then he puts those variables together and tracks their general progress. Right. So this is one way to do it. You can track all these different variables, see how the combinations of these setups work for you, and is it completely quantified? Well, yes and no, right? What are some of the things that are a little bit subjective in this methodology? Well, acceptance, how you read acceptance on these individual time frames, um, rhythm, how you read the rhythm on those individual time frames, what you're using to define this acceptance as well. Those are two variables that are fairly subjective. Now, you could quantify these also, right? You could say, well, it's only accepted if 50% of a leg of rhythm is above or below a DVA level. The rhythm itself, you could quantify with zigzag tools if you needed to, if you absolutely needed to. Um, that might help somebody that's just getting started. I actually knew a trader who took off the bars on his charts, so there were no more like price bars, and he only had the zigzag tool showing so that he could see the length of rhythm, and then of course it had the quantities and stuff like that in here. And it was just one of the charts he used to kind of figure out the length of rhythm, how far things were, and his DVAs were on that chart as well, so he could kind of tell whenever acceptance was shifting or not. That's all ideas and things that you possibly could do to quantify something like this, right? So that's just like one idea that springs into my mind with narrative, and this is just an example that I found from somebody else. What I do is a lot less quantifiable than even this, right? I know a lot of people that break Nadro narrative down like this and use different variables and combinations of those things, and then they say, okay, my best setups are often extreme fades on the weekly with a monthly IPB or something like that, right? I've actually gotten away from that a little bit, and I've started to lean more into understanding the environment in which I'm trading a little bit more. So I've the most amount of discretion that I have is in my narrative reading. It's the most subjective part, it's the most discretionary part, but it's also the part that I'm the best at with discretion because I can sit there and analyze for some amount of time and I can come to conclusions without being rushed by market generated information. So is it necessary to quantify narrative and to what degree? Uh, that's going to be kind of up to you in terms of like how specific you want to get with quantifying narrative. Another person that I knew did a decent job of quantifying some narrative and some playbook plays. I believe, let me see if I can find the journal. Moses was doing a good job of that as well. and he was starting to break down a lot of his narrative plays in by specific setups, right? He had extreme fades, he had IPBs, mainly filtered through the weekly and things like that. And then, of course, he was tracking the hit rates on these things of the narrative plays himself and then his execution model and all that stuff. So, going back to like your question, um, these are some ideas about how you would quantify narrative reading and what you would look to do. Normally, it's combining specific variables that you can control and you can understand and track. That's the simple answer. And of course, I gave you a couple examples of how that could be done. Um, Depending on what you're doing, like specifically to you, I could probably help you quantify that part of your trading if you needed to. But you might not need to. You might be a little bit more like me, and that might be a part where your subjectivity and your discretion is really important, and it helps you develop a bias. And maybe your bias reading is what's really the strong part of your trading, and you need to work on an execution model or something like that that can be quantified more clearly. Now, excuse me, whenever it comes to reading the tape, that's a different story because what a lot of people end up doing with this is they end up tricking themselves into um I guess the best way to put it is thinking that they're seeing something that they really aren't, and just because price moves in a certain direction they think that like that's reinforcing these observations. There were great videos from Jigsaw Trading that were out there that were all about like what tape reading looks like and like different setups and what they look like. There was like 7 or 8 setups, and they I remember like the video is so old, so long ago, but he had like specific setups where it was like if you're reading the DOM or the price ladder, and you start seeing a bunch of contracts at XYZ level, um, and it's price is coming up and it gets stuck here, stuck. The play is that as soon as it starts to come down, that's considered an iceberg. You want to get involved with that. If it breaks once it goes up, that's considered confirmation that the absorption phase is over and they've now like broken the iceberg, and you want to get involved in that. Um, Quantifying tape reading skills depends on what you mean by that. If you're reading from a DOM, there's ways to quantify that. If you're reading a footprint, there are ways to quantify that. And if you're reading cumulative delta, there's ways to quantify that. So I really can't answer it specifically, but for example, a DOM, quantifying it would be looking for specific setups and how they occur in the specific variables that come with them. Quantifying a footprint, that comes down to quantities, right? Understanding the quantities at each price level and then finding a way to show you information that you want to see. I have a footprint that is designed to show me where one side of the market is more dominant than the other, and it actually gives me good references for turning points. Um, Cumulative delta, same kind of thing. Cumulative delta, though, is more like reading price. And a lot of people don't think of it that way, but you really should. Think about if delta's coming down, 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 it's trending down, and then something like this happens, right? You get a big delta move that breaks a trend line, right, on the delta bars themselves. This is information. This is a minor context shift, and if it has continuation, then you can start to say, well, the buyers have stepped in here at this point. So quantifying things in delta comes down to price patterns in that regard. So each one of these different tape reading things have different ways of going about quantifying them. It just comes down to your specific way of defining reading the tape, right? So this is the part I wanted to talk a lot more about. I'm actually putting up decent numbers in market replay, and I have a written process, but it feels so discretionary. That right there, this statement is letting you know already that you may have a process that essentially is probably like a basic risk model, but you're doing things on a daily basis that have so many unknown variables. So once again, you say I'm doing well when I'm concerned because it's not obvious to me exactly what I'm doing that's leading to positive expectancy. This is the statement of the year for most NADRO traders. They go through periods where they're seeing positive expectancy and they think that this is what NADRO is. Like, this is NADRO. I got it. It has edge and I'm doing it. Most of us, 9 out of 10 of us, will go through a period because NADRO works as a framework where we're doing well And we're essentially doing well in randomness, not systematically doing well. So what I mean by that is, let's say you are sitting down, you're developing a bias in your narrative reading skills, right? Your narrative is leaning to some kind of bias. Now, if you have no way of measuring the word bias, you have no idea if this part of your trading has edge or not. Ways you could measure bias, right? Some ideas. Is the biggest move of the day in my favor? Right? Is the biggest move in a window or a time frame? Like, for example, if you only want to trade from 9 to 11, does your bias capture the largest move? If I'm long, does the market generally move like this? If that's my bias, right? That's a very simple and basic way on a pass fail type of basis that you could start to quantify something as simple as narrative, where it's like, yeah, I sit down and I discretionarily build out narrative, but that's fine. Track its result somehow, some way, shape, or form. A lot of people do it by the completion of a narrative thesis. Like, for example, let's say we're trading weekly DVA and price is kind of doing something like this, and you get that return pullback, and like this is the trade, right? And then this is DVA high, and then this is DVA low. And they say, well, here's the start point, here's the end point. This is a successful narrative. Therefore, that's a positive check for my narrative reading skills. I'm going to give you a little heads up here. On the higher time frames, these narratives, they do play out like with the laws of market dynamics from reference to reference, but it is rare. It is very rare. Core positions and core ideas do not often get hit within the day because we are day traders, right? So that's what I'm assuming. Within the day very often. So you'll probably want a different metric to measure whether or not a narrative is working for you. One metric might be, if, for example, if this is the weekly, let's say you consider this narrative having worked if it gets below this price action low and it starts to break out. Maybe it doesn't get all the way to DVA low on the weekly, but it gets like, to VWAP or a little further. That can be a way to measure the success of a narrative or a bias or something like that, right? So that's one part of giving away some discretion and finding some stats behind what you're doing to support whether or not it's your narrative reading skills that are leading to positive expectancy or it's your execution model, whatever that might be. If your narrative reading skills come out and it's like, well, I'm right, I have a good bias about 20% of the time, but I'm still making a lot of money, it could be because your execution model is fantastic. And you're just really good at risk reward and or you're finding opportunities that kind of work in either direction or something like that. In which case your narrative reading might not be a part of your trading you want to focus heavily on, and you might want to be pushing execution skills. I don't know. But this is always going to be a classic seesaw between which one is actually creating the edge. Is it the narrative reading skills or is it the execution? And like in my particular model, it is a true balance of both. I have a decent edge with narrative and I have a decent edge with execution, and I've put them together and they work pretty well. Some people, they tilt, this way. They have better narrative reading. Their narrative reading is way better and their execution is weaker. So the narrative reading is really what drives the edge. Other people, it might go the opposite way. Their narrative reading might be really poor and their execution skills might be up there, which is kind of what it sounds like you might have. I can't say for certain, but if you're somebody that's doing a lot of tape reading or discretionary trading, my guess is that you're executing on a very regular basis on both sides of the market. But I don't know your process, so I'm speaking a little out of turn here. But in general, like this is the idea, right? This quote in particular is what you have to remedy in your trading. You have to know exactly what is leading to the positive expectancy. And the best way to do that is to start thinking about everything that you're doing and putting them into their own buckets for measurement. Now, like I just said here, most people in NADRO, they shake out according to narrative is one type of edge and their execution is another. and the way they execute has so much expectancy, and the way their narrative plays out has so much expectancy. And then the combination of the two is the result of their processor, the system, right? But each one of these can be measured in and of themselves for that expectancy also, so that you know, well, where's the real edge coming from? Is it coming from the execution model, or is it coming from the narrative model? Like I said, for me, there is kind of a balance between the two. But if you were to put a gun to my head and say, where's your edge really coming from? It's really coming from the way in which I read narrative, because my bias is right, 50% of the time or more. And whenever my bias is right that often, the execution model can be a little weaker, a little looser, a little less variables here. For example, I don't use intraday DVA right now. I don't use it at all because I don't need to, because it's one variable that I don't have to track and I don't have to really use at all. Order flow, the lower time frame things, really that DVA and order flow part of Nadro, I'm not really using or relying on heavily right now. So I'm really focused on the narrative reading from narrative, acceptance, and rhythm. So if you're looking at my seesaw, it's probably more like this. That's where the edge is coming from. And then I have an execution model that is very basic, and it keeps me from over risking. So the risk model that goes along in this execution phase helps balance this out to create the edge that I kind of have. And I would say it's probably something like this. Like it's just barely leaning on the narrative edge, but the execution is what helps this play out more clearly. So that's kind of speaking from my own trading. But you hit the nail on the head whenever you said this. I'm doing well, but I'm concerned it's not obvious exactly what's doing well in your system. So my advice to you is start breaking down the parts of the system that you have. Is it narrative? What do you use to execute? And then break down each tool, if you can, to their specific variables. And then you can track the combination of the variables and which variables give you the best expectancy. So hopefully that really helps. I'll post this right here below for you, and you guys can dive in.